Hello, everyone, and thank you for joining us today. My name is Rocky Miller, and we're here with Dr. Venetia Dutra, a professor of real estate and finance, as well as the owner of Brown Equity Properties. Dr. Venetia Dutra, thank you for joining us today.
Glad to be here.
Brown Equity Properties.
Yes.
So at first glance, are you guys a real estate company?
We are a real estate company, but not really in the traditional sense of the term. So most of us think of a realtor or maybe a property management firm when you think of a real estate company. We're none of those things. We are actually an investment company. We are an investment fund.
Talk to us a little bit about what is an investment company and what type of investment company are you guys?
Sure, absolutely. So most of our viewers are probably very familiar with what a mutual fund is, like a Vanguard mutual fund or maybe an Oppenheimer fund. Actually, if you're investing in a 401k at your job, you're probably already investing in a mutual fund. So in a very similar manner, we take in capital from investors and we invest that capital on their behalf to earn them a return. So that's what an investment company is, and that's what we do.
So you guys are just like any other investment fund?
We are what's called a social impact fund. Actually, we're one of the first Black-owned social impact funds. Our capital is invested in projects that we believe will generate measurable and sustainable benefit to communities of color and the residents within those communities. So that's how we differ. Most funds are profit-driven, so they're focus and only focus is to invest in things that will generate a profit. And now, mind you, that is absolutely one of our thrusts. That is absolutely our mission. We will give our investors a return, and a very handsome return, we believe. But the projects that we invest in have a social benefit to communities of color, and that's how we differ.
Well, I love this, and I love the cause and the mission. What drove you to this particular purpose?
I'm a real estate and finance professor. And a big part of what I do daily is look at data. I look at data, I look at numbers, I crunch numbers. And the numbers that continue to confound me are around the wealth statistics within the Black community, or lack thereof. There are many metrics, there are many statistics I could quote right now. And we're unfortunately basically at the bottom of the totem pole across all metrics. But let me, if you'll allow me, let me focus on two, because I think they will really drive home the point as to why Brown Equity Properties and our mission is so important. So two statistics I'll point out. Let's start by dividing the U.S. into four demographics, four distinct demographics. Let's say African American, Hispanic, Asian, and white, four demographics. And let's look at homeownership rates across those demographics. If you look at the African American homeownership rate, it's roughly about 41%. So 41% of Black households own their home. And that could be a mortgage. You could have a mortgage on it, but by that, I mean, that's still considered to be home ownership. Now compare that to the Hispanic population, where it's roughly 45%. And then we'll just go ahead and lump the Asian, and not that they aren't distinct groups, but Asian and white populations together, because their statistics are very similar, and it's at least 70%. So here we're talking roughly 40% versus 70%. That's a huge gap, Rocky. And so some of you out here may say, or may be watching and thinking, well, what's the big deal? Why does homeownership matter? Why does it matter whether I own a home or whether I'm renting a home? Let me then go to the second statistic. The Federal Reserve puts out a plethora of data every year, and including the statistic I'm about to quote. So the average net worth, Rocky, of someone that owns a home is about $171,000, okay? Now compare that to the average net worth of a renter, and that net worth is roughly $5,500. $5,500, $171,000, okay? It drives home the point and the importance of our mission. Home ownership matters. We have to improve these statistics if we're going to change the wealth outcomes and general well-being of our communities.
I just saw an article that talked about how, I guess over the last 10 years, this is one of the most difficult times for home ownership that they've seen in the last 10 years.
it's not surprising. So if you recall, we've just come out of a very low interest rate environment, and now interest rates are starting to go up. But we were in a very low interest rate environment because we had just come out of a significant recession, right? Where housing was significantly impacted, right? So what we saw happen there was that many banks began tightening up their qualifications to get a loan. So what sort of got us into that mess was the easy lending, the easy credit. Anybody could get a loan. And then once the housing market crashed, we saw banks really tighten. And regulators really came in and tightened that whole thing up and said, hey, you have to tighten your standards. You have to make sure you're doing your due diligence. And so it did become, relatively speaking, more difficult for people to own a home because there was more diligence involved in the process, which is a good thing, by the way. But to add to that, the interest rate environment we're stepping into now is one where rates are going up, which ultimately impacts affordability. So this is another reason why what we're doing and our mission here is so important. And our model actually helps increase home ownership within communities of color.
So Venetia, how does this work? How did you get Brown Equity Properties, modeled together, so to speak, out of all of this information?
Sure. The model itself is pretty straightforward. So we go into communities of color and we purchase homes where we see a potential for significant upside, a potential for a significant return. We purchase homes that are in disrepair and often a significant state of disrepair. We refurbish these homes and then we sell them, hopefully to residents that are already living within that community. We add a tremendous amount of value to the property, which then increases the value to the whole community. So that's our model.
I love that. And if I want to invest today, I know that I'm going to earn a return, obviously.
That's correct.
Are there any other benefits, though?
Yes, so all of our investors earn a return, regardless. Regardless of how much money you put in, you will earn a return on your invested capital, just like any other investment fund. But remember I said we are a social impact fund. So the part of our mission is to increase the home ownership rate within the African American community. And we establish and maintain what is called a down payment fund. For any investor within our fund that buys one of our rehab properties, we will make the down payment for that investor up to 3% of the purchase price. If you ask the average person why they have not purchased a home, 9 times out of 10 they'll say it's because they don't have enough capital to do so. They don't have the money for the down payment, they don't have money for the closing costs. So we understand that issue, we understand our audience very well, and so to combat that, we have established this fund and we are making the down payments for those that buy our properties. We work in conjunction with a couple of key strategic partners, and these are banks, that have 3% down programs. So in essence, we can cover your whole down payment, which makes home ownership so much more obtainable and affordable.
So if I'm not in the city where some of this property is available.
Yes. Don't lose sight of the fact that we are an investment fund. So in the same manner that you would pick up the phone and call a Vanguard and say, Vanguard, here's $2,000, here's $500, invest this capital. You do so in a heartbeat, right? Because the only thing you're expecting in exchange is a return. Well, we're giving you that. That's not going anywhere. So we take investment capital from investors throughout the country. Doesn't matter what state you are in. But we are focusing this project on the Houston area. So even if you're not in Houston, you will earn a return on your capital. But if you are in Houston, all the more reason to be an investor in this particular fund because you have the ability to purchase one of our properties with what we believe is an investment benefit that we haven't seen in any other fund that we know to be in existence. So we're very proud of what we're doing here. We're very, very happy.
So Dr. V, I'm sold.
Okay.
I'm not in Houston,
Okay.
but I want to invest.
Okay.
Is there a minimum that I can come in, jump in, or?
We understand our audience, and we have created this fund to appeal and attract the masses, right? So many investment funds do have fairly high initial investment requirements, and that could be $2,000, $2,500 as a minimum investment. Our minimum investment is $250. So for as little as $250, you can become an equity or a stakeholder in this fund and earn a return. And with as little as $250, you can get access to this down payment fund, which is obviously an attractive move if you are in the Houston area. So yes, we have thought about all of this, and we want to make our fund accessible to everyone.
So what type of return are we talking about, Venetia?
So our projections show that we will earn our investors a return of roughly 10% a year, and we think that's a great investment return. And let me put that return in perspective for you, Rocky. The S&P 500, since inception, if we track it since inception, has earned roughly 9%, 8 to 9% per year. Okay, we project that we will be able to yield 10%. All right, and that's in addition to the other benefits of being an investor.
Well, that sounds awesome, Venetia. So how do you guarantee your investors this 10%?
We don't guarantee returns, and we're no different than any other investment fund in that respect. If you were to call up Vanguard or any other investment fund today, they won't guarantee you anything. They'll say, hey, here's a look at our historical returns, and here's what we project given what we have seen, but they can't guarantee you anything. So even with the S&P 500 example, on average, the S&P has yielded roughly 9%, but you could have some years where they're yielding, 15%. Another year could be negative 5%. You don't know, but we are insulated to some degree from some risk because we don't have a buy and hold strategy. We fix these properties up and we liquidate pretty quickly, which helps free up our cash flows. So we have what we believe is a safer model than investing in the capital markets.
Is there a potential that an investor could earn more than 10% on a return?
So the fund's aim actually is to earn a return greater than 10%, because remember, as a social impact fund, we have a secondary component. So we aim to give all of our investors this 10%. But we also have to fund this down payment fund, right? So any profits above and beyond the 10% paid out to our investors contributes to this 3% fund. That's one component. We also have a job skills training component that we fund. So as a condition of accepting a bid from a contractor, they have to agree to mentor or help train a kid from the community that may not go to college or may not have a skill or may not have a job. They have to commit to spending at least a certain amount of hours per week training up the youth from the community. And we've also fund that from our profits as well. So the short answer to your question is anything above and beyond the 10% is used to fund our social enterprise.
So Venetia, I'm sold.
Okay.
I'm sure the audience is sold as well too. Should I invest now or can I invest later?
It's actually a really good question, Rocky, really important question, because this particular fund raise is capped at a little over $1 million, and I don't foresee us taking long to reach our cap. So I don't advise you wait, because you may miss out on the opportunity to invest at all. Once we hit that number, we will be closed to all new investors at that point.
How do I sign up? How do I become an investor?
Absolutely, Rocky. So if you are interested in investing with Brown Equity Properties today, it's very easy to do so. Please visit our website, www.brownequityproperties.com, www.brownequityproperties.com. And if you have any questions, you feel free to email our office at invest@brownequityproperties.com. invest@brownequityproperties.com. Thank you very much.
And thank you, Venetia, for joining us today. And remember, please go and visit the website, find out how you become an investor, brownequityproperties.com.